Hey everybody, Courtney Smith here with our April 26th edition of Wall Street Winners. And this is our April 26th edition of our disclaimer. Oh, it looks a lot like last week's. Okay, S&P, we're basically breaking back up into new all-time highs. Now, I think we're just going to be struggling here. Look at the purple predictor. The purple predictor is not anywhere near new all-time highs. So don't look for this market to explode to the upside. Seasonality, which I'll show you here in a minute, is bullish. So continue to look for a bull market here. Dow Jones. I told you that the buying pressure was unsustainable and the selling pressure was even more unsustainable, and they both moved in opposite directions. But now look at them. They're both drifting lower. Net, it's bullish because there's more, the green line is above the red line, so that's more bullish. But nonetheless, this is not the sign of a powerful bull market. Sluggish bull market, yes, but bullish, but wildly bullish, no. NASDAQ, purple predictor is better here than in the S&P. So we're starting to see more of a shift back into the tech stocks and away from the old economy stocks. This is largely due to the shape of the yield curve coming down. That promotes growth stocks more than value stocks. So we're starting to see that shift away from old economy, industrial, financial stocks, things like that, back towards the technology stocks because of the narrowing of the yield curve. Well, I'll show you that in a minute. Okay, our seasonality indicator for the stock market, we're coming to the end of the best 6 months, which ends April 30th. But since we're still in a bull market, we have to remain bullish. Now, I usually let it run maybe 30 days past April 30th because we don't really know exactly when it starts and when it ends, okay? All the studies have been done and they only really look at the beginning of the month. So they look at, April 1, May 1. Well, maybe the peak is really May 3rd. I mean, nobody really knows. So we'll keep our bullish signal here. I've raised the red line. If we break below that red line, then we'll abandon our bullish posture. But right now, we've got bull market. We've got a bullish seasonality. You've got to have extra large positions. Okay, now down at the bottom, the Utes were bullish. I'm not even sure where I want to put my red line, which would mean that we would abandon it. Now, remember, we're bullish. We started looking for bull signals, which we got several weeks ago, starting April 1st. This seasonality is going to continue until October 31st. So we got to be getting more and more long the Utes. And there's XLU. There's a Ute for you right there. That's an ETF that you can use. Our seasonality, although at the very beginning we have a little hook down, then solid into the beginning of May. This is really one of the best times of the year. And remember, we're focusing really on the purple and red lines. Those are the ones that I think are most applicable to this year. Asset allocation stalled out, but at a very high level. Still more money coming from the bond market into the stock market. Our stock market risk indicator had a nice little spike up, but has yet to break to new highs. But I think it will. Once again, sluggishly. Global shares also looking good. Yield curve. Now, this is what I was talking about. The yield curve started to narrow, and that increases the buying pressure for technology stocks or growth stocks, really, and against economically sensitive stocks like financials, manufacturing, materials, things like that. Bonds rallying, but look at the purple predictor. The smart money's still selling bonds. And I think we're going to see the bonds break to new lows, but I'm not short. And I'm not going to get short until the bear market resumes. But the environment for bonds is bearish right now. So we're going to look for the continuation of the big bear market coming up. It might take several weeks before it can develop into a new bear market, and I will short bonds then. Bond key factors. Let's start with the upper right and work our way down. you can see that the CRB index, which is that little chart there, it's rallied and it's making new higher highs and higher lows, putting upside pressure on interest rates. Gold has started to move back up again, although it's not in a bull market. Nonetheless, it's putting pressure on interest rates as well. And then we have the green line. That's actually interest rates. That's 10-year Treasury yields. And underneath it is the blue line, which is a 10-year yields in Germany, and it's also putting upside pressure. So look for bonds to start to move down again. It's pretty darn clear. Now the dollar has, frankly, it's gone down more than I thought it would, but we've broken to lower lows. So right now we were making higher highs, but lower lows, probably a market we should avoid. Gold, on the other hand, starting to move up. Now, I'm not long gold. I don't want to be long gold, but the situation is becoming more and more bullish for gold. And so I want to get a clear bull market. We have a mini bull market for sure. I'm not going to quite get in here yet, but if interest rates keep coming down, the yield curve starts narrowing, I'm going to get more and more bullish on gold. Our indicators are now all bullish for gold. So you can see this is one reason why I'm getting more and more bullish all the time. But when you look at this price, we need a dip and then maybe a rally, and then I'll maybe get in. So we need to be patient here in gold, but we will get long again. I think is going to be our next big play here. Crude oil, I'm getting more and more bullish. I think this thing's going to break to new highs. I think we're going to hit $70 a barrel. And it might take a couple of months, but the place to be is gasoline. We're coming up to the summer driving season. There's going to be a lot of pent-up driving around as people don't have to wear their masks, or they can go all over the country. So as everybody gets vaccinated, we're going to see a lot of pent-up demand for gasoline as people go on vacation for the first time in a long time. No more staycations, time for vacay. Bitcoin collapsed. We got the breakout, which I expected and I told you about, but we broke below the lows, and so we don't want to be long here at all. Our last trade was probably a loser if you followed our suggestion, but that's after a lot. We had a whole string of winning trades in a row, but right now we have to be bearish on Bitcoin. We got to be bearish. We're making lower lows. We're also making higher highs. So technically it's a neutral market. But the other thing too is look way down at the bottom, the volume on Bitcoin. Now these are Bitcoin, and you can see that the volume was strong as the market was in the big bull market. And then over the last week, we've seen volume go up as the price went down. That confirms the bearish move in Bitcoin. All right, freebies, love having you here. Fully paid up members, hold on for just a second.